Is the Chattanooga and the national market headed for a real estate crash? Have we reached the real estate bubble? Stick around and let's see what the statistics say. Hey everyone, this is Mike Burge from the Nooga Team, and in this video, we're going to attack the topic of the housing bubble. But before we get into it, please take a moment to click the subscribe button so I can keep you updated on the latest Chattanooga real estate market information. Now, this question seems to come up about a bubble or a crash, and it's similar to what we saw on the front end of the pandemic. It's maybe housed or packaged a little bit differently, but the pieces are similar to what we had talked about on the front end, about how people handled their equity and how the difference between the market today versus back then. And I'm going to walk you through some of that here. I'm going to go ahead and share my screen with you and share these slides. This topic has started to come up more and more as the questions are being asked. Two articles here in the last couple weeks, one from Yahoo Finance of why are so many Americans predicting a housing market crash. And as you go into that article, about 67% of the people in this particular study were saying, okay, yeah, in some form, I think we're headed toward a housing market crash. Then just a couple Thursdays ago, front page, I don't know if there's a front page anymore of the newspaper, but when you open your app or you go to the website, the front positioning there of the story, are we trapped in another housing bubble? The interesting part of it is, if you can see that text there says, home prices are rising coast to coast and outstripping wages and rents. Some say the housing bubble, but it's nothing like that it was in the mid-2000s. There is a component of that, but as you know, headlines do more to terrify than to clarify. In the Yahoo article, there's a study, and a lot of people were saying, yeah, I feel that. So that's legit. But if you go into the USA Today article and you read that, it's actually a very fair article. But the headline leads people to believe, okay, we're heading toward a bubble. But the experts in the article are saying, it's not really forming up that way. Now, they've had some concerns about rents and about rising prices, which are legitimate. And the foundation of this question comes, I think, at the escalation of the appreciation in this country, that people go, okay, homes are appreciating very quickly. What does this mean? And it feels like the same song's second verse. This is part of what I told you that is very similar to 2008. I remember where we were then, and here we go again. I want to take you back to this slide. This is historically, in this country, there's an appreciation of 3.8%. That's historically what homes have appreciated at. If you were to play that out from 2000 all the way to today, let's assume homes appreciate at 3.8% each year. Now, when we lay in the actual appreciation, we see what's happened. And I've talked about this before, but we ran up the prices in the housing crash and we saw homes lose value. And now they've been coming up where even in just the last year, we've caught up to where we would have been if we had just experienced a normal or average appreciation. So I think it's a valid concern for somebody who's not in the real estate business to ask this question. This feels eerily similar to what had happened before. Now, the other validator is this Case Shiller came out and said, homes appreciated at 9.5% FHFA on the right side there, and it came out and said the homes that appreciated at 11%. Different entities are going to say different things. Let's call it homes appreciated at 10%. Right there in the middle of the two. Okay, so for 1 year, that's a lot of gain in the price in a 12-month time period. Bill McBride from Calculated Risk says this in the Case Shiller release. Seasonally adjusted national index was reported as being 26% above the previous bubble peak. However, in real terms, the index is about 1% above the bubble peak. So that means in real terms, factoring inflation and appreciation, it's about 1% above, and that's key. So the question generally goes at this point is, hey, homes are appreciating at 9%, 10%, 11% from the FHFA, and that's not sustainable. And yeah, I think anybody in the real estate business would say, yeah, homes appreciating at 10% year over year is not sustainable. And so that's the conversation. So I think we can step in to an understanding that concern. Now, here's what I would say right now. We look at 2021 and what the experts are forecasting for the home prices. Nobody is saying that it's going to rise again 10%. Actually, the average of all these is 7. All these 7 is about half that. It's about 5%. Another example of this is, what happens when we're in a low inventory situation and in the rising price situation. This is a very telling visual. To take the single family inventory, which is in that orange color you see there, and you can see it's decreasing, and the home prices from 2010 to today are going up. And the moral of the story, as supply and inventory goes down, the next logical step is that the price goes up. So the next logical question would be, okay, if all this inventory comes back into the market and interest rates shoot up and we're back to where we were prior to the housing crash. So let's talk about that for a minute. I think that's not a likely scenario, but it's something that people could say, I have concerns about that. So here's the graphic I go back to. So let's say, the difference between 2008 and today, we know that there was an extreme buyer's market. Today, we're in an extreme seller's market with 1.9 months of inventory on average across the country. So what if we were to end up going, having a lot of inventory come back on the market again, which again is not a likely scenario, but more inventory will come up back on the market. Likely that inventory is going to be purchased quickly as it comes to the market, like what we've seen, and the interest rates will shoot up because that's a concern. Again, this is not a likely scenario. If you were to compare the last time we were in a housing crash today, there are so many things that are different. First of all, the last time in the housing crash, we were in a buyer's market. We were in a severe oversupply in this country. We know how people were handling their equity back then, and we know how they've handled their equity today. And now, at the end of the day, right now where we sit, homes can't keep up with the population in this country, and we have an undersupply scenario. Now, I found this a very interesting statistic here from CoreLogic that you can almost layer on top of this to say, okay, what if that did happen? What if all these homes came back on the market? What if the interest rates shot up? Here's the biggest differentiator relative to what happened back then is the percentage of the homes that were underwater are nothing like it was the last time back in 2010. In 2010, 1 out of every 4 mortgages in this country were underwater, meaning they owed more on the home than it was worth today. And that number is about 3%, significantly lower than where we were back then. So I'm not saying that that scenario is going to come true, where all these homes are going to come back on the market and interest rates are going to shoot up. I don't think that, and the experts certainly aren't forecasting that. Now, I'm very interested in your thoughts on the housing market and the thoughts of the housing bubble. So please post your comments below and we'll continue the discussion there. If you're thinking of buying or selling a home in Chattanooga or North Georgia area, please check out our website, NOOGA-realestate.com. That's NOOGA realestate.com. And you'll find a lot of great information there to help you. And as always, give us a call at 844-NOOGA-HOME to talk directly to a home expert. Thanks again for watching, and be sure to subscribe to the channel and check out more of our videos on the Chattanooga area real estate market.